Hi student, welcome back to the new video. In today's video, we will basically learn about some extra journal entries, basically journal entries which are very important for all of you to understand. I'll be writing the questions that what are the journal entries that we are going to cover in today's class, and with this the journal part will get over and we'll move forward to the ledger in my next video. Okay, so now I'll be showing you the questions that I'll be solving today. So students, here are the journal entries that we are going to solve in today's class. These are some special cases of journal entries that you guys need to learn about, which I'll be solving one by one. So now we will journalize the transaction one by one. The first transaction is bad debt of rupees 10,000. Now you already know that a bad debt is any amount of debt which we fail to recover from our debtors, right? Bad debt comes under the head nominal account. Okay, so we know that any loss needs to be debited. So bad debt is a loss for us, and of course it will be debited, right? Now this bad debt has occurred on the part of some data, right, which are recorded in the books of account. So as soon as we are recording a bad debt, the data's balance or the data's account will get reduced, right? Basically data's account is reducing, so the journal entry that will be made over here will be bad debt account debit to the respective debtor account who has failed to pay our dues, right? So the journal that will be made will be bad debt account debit to debtors account. The amount, as we can see, is rupees 10,000 in debit, 10,000 in credit, being bad debt recorded. Moving ahead, the second question is interest on capital provided at the rate 6% per annum on rupees 40 lakhs. Right? Basically what happens, the proprietor who introduces the capital gets an interest, an annual interest at a specified rate. Okay? Now the interest that we are giving to the proprietor is an expense for our company, right? So it will be debited, and as a result of this, the capital account of the proprietor will get increased because the amount will be credited to his account. Okay, so when we provide interest on capital, basically interest account gets debited because it is an expense for us, and the capital account of the proprietor gets credited because balance of it is increasing. So the journal entry of it will be interest on capital account debit to capital account amount. Now of course you guys will have to do the calculation, which will be, now we will do 40 lakh into 6%. 40 lakh into 6% comes to 2 lakh and 40,000. So I'll write now 2 lakh 40,000 the debit and 2 lakh 40,000 in the credit, right? Moving to the next entry. The next entry is a bad debt recovery has happened. Now what happens, actually many times it happens that we have recorded a bad debt, right? But at a later point in time in business, the bad debt gets recovered. So we need to pass an entry. Whenever a bad debt recovery is happening, either cash or bank will get debited because the amount of money will either come in cash or will be credited to the bank account, right? So cash and bank gets debited, and we credit bad debt recovery account. Bad debt recovery is a kind of income for us, and hence bad debt recovery gets credited. So the journal entry that will be made in this case will be cash or bank account debit to bad debt recovery account. Okay, whatever the case may be, they may say that we've received cash or the amount is sent or credit to our bank account. So likewise, you guys will debit the transaction cash slash bank account debit to bad debt recovery account, and the amount is rupees 10,000, right? Because they have said the bad debt which was early recorded is now recovered. Okay. Next entry is sold goods to Aman. This we have covered in the last class. Very basic entry. Aman account debit to sales account rupees 50,000, right? I am not narrating the transactions because I know that you guys will be able to do it just copy paste thing from the question. So I'm not writing it over and over again, but you guys will have to write it in every journal entry. So next entry is received 48,000 from Aman in full settlement. In this journal, we sold goods to Aman for 50,000, and this was a credit sale, right? Credit sale as in we sold on credit. Now what Aman has done, Aman has paid us rupees 48,000 in full settlement. Now what is the significance of this? Sometimes it may happen that a credit sale or a credit purchase gets settled at an earlier date. Okay. Now to settle this, we basically offer some discount. So basically when I sold the goods to Aman, I had discussed a date on which the payment will be made, but now I have asked Aman to make an early payment, for which I have given him an offer to pay rupees 2,000 less, right? Which in my case will be discount allowed because I am allowing him a discount, right? And discount allowed is a kind of loss for us, and hence it will be debited. Okay, so the whole transaction for this full settlement entry will be cash account debit. Cash account gets debited for the 48,000 that he is paying. Okay, 48,000. 2,000 will get debited for the discount we have allowed. Discount account debit rupees 2,000 to, now whose account gets settled? Of course Aman's. So to Aman account 50,000, and this makes Aman's account settled. One time he was debited with 50,000, now he has been credited with 50,000, and his account with our firm is settled as of now. Okay. Okay, so the next entry is theft of rupees 4,000 from godown. Basically what happens, there are some instances which are not normal to the course of business. For example, a theft has happened, or a fire has taken place, or some kind of mishap that has happened. Basically, will be treated under the head abnormal loss. Okay, so whenever an unusual incident happens which causes us a loss, we debit abnormal loss account, and because in this case goods has been there has been a theft of goods, right, or goods have been stolen. So basically we will debit abnormal loss account and we credit purchase account to show the effect of the decrease in the amount of stock that we have. Okay, so the journal entry for a theft is abnormal loss account debit to purchase account. Now if there would have been a theft of cash, we would have credited cash account, but because the theft is of goods and we generally do not maintain any goods account, we pass it under the head purchase account. Okay. Now the next entry is withdrawn rupees 4,000 from business for personal use. Basically what happens, many times the proprietor draws money from business for his personal use. Now this personal use is treated, money or stock withdrawn for personal use is treated under the head drawings. Okay, so whenever the proprietor is taking anything for his personal use, we debit drawings account, and if he is withdrawing cash, so cash gets credited, and in case he is withdrawing goods, so the purchase account gets credited, which we discussed here, right? Whenever a withdrawal of good takes place, we credit purchase account. So the entry will be drawings account debit to cash account, because in this case he has withdrawn cash. Drawings account debit to cash account. Okay, I forgot to write the amount for the previous entry as well. It will be 4,000, and this one will be rupees 4,000 as well, right? Moving ahead to, so now basically the next entry is distributed goods worth rupees 3,500. Now basically what happened, we are distributing goods to common people in the market, or it can be distributed for charity purpose as well, but we have not distributed goods for any specific purpose. I am assuming that we have distributed goods for the charity purpose, right? Any event might have come, maybe a children's day or some kind of thing, and a firm deals in stationery, so they can distribute the goods for charity as well, and this will garner them some kind of advertisement as well. But here we will take this distribution as charity. Okay, so in case of charity account gets debited, and because we are distributing goods, again purchase account will get credited. So the whole entry will be charity account debit to purchase account. Now kids, what would have happened if they would have distributed the goods as free samples? Now what happens when we are providing free sample, we are basically running a kind of advertisement campaign, and when goods are distributed for sample purpose or for advertisement purpose, we then debit advertisement account and not goods. Goods will never get debited, either it's charity or it's drawings for the personal use or it's advertisement, right? And the amount is rupees 3,500. Now interest rupees 400. Okay, now basically that will be interest received rupees 400. Okay, so basically when we are receiving interest, cash comes in. Okay, either the amount gets credited to bank or we get it in cash, but here nothing has been mentioned, so we are assuming that the interest is received in cash. So cash coming in will get debited, and interest, which is our income, will get credited. Okay, amount is 400. Last entry, I assume most of you will be able to do. Proprietor paid rupees 4,000 for the repairs of his personal car. Now his personal car belongs to him. It is not an expense of business. So when he has spent a sum of money for his personal use, that will be treated under the head drawings, right? So in this case also, drawings gets debited to cash account, and the amount is 4,000. So these were the set of entries that you guys should be able to know in order to journalize a transaction. So these are the set of journal entries that you guys need to know. There is a part 1 to this video as well, that you guys can go to my channel and watch that video. The part 1 discusses the basic entries, and this one discusses the later part of it. So these were the journal entries. I hope you guys have liked the video. If you guys like the video, find it useful, please like the video, comment on it, and subscribe to my channel. Thank you.